Hello everybody, welcome to the channel. Today we're going to be talking about Walt Disney, one of the best, in my opinion, motion picture film producers. We have a lot to talk about on Walt Disney today. I think it's going to be a great opportunity. It's earnings season. I think there's going to be volatility. We'll talk about a couple strategies. One that I just want to take a look at and just see if there's, if there's money to be made in it. So before I jump into the chart, dissect it, and give you my thoughts on where it could go and how I'm going to position myself if A or B happens. This is not financial advice. The disclaimer is in the description below. I do this for education and entertainment purposes to help you understand some, trading fundamentals so you can pull profits on a regular basis. So let's jump into the chart and analyze Walt Disney. So we have earnings coming up this evening into tomorrow, and as you can see, I drew lines exactly where earnings each earning it is. So if we look at that chart, let's pull it up here. There is a lot of volatility after you had a move. So if we look here, we went from end of day 190 to 182. That's $8. We went from 136 to, you have, what I'm really looking for is $5+ move. We had it here in almost in every scenario. We had it here, right? 178 to 170, 173, easy $5. And then you had a gap up of $5 here. So there's a potential of a $5 move on the upside or the downside. And because there is, this volatility, this gap, I'm looking at, and this is just for actually my own education right now, because I think I want to start doing this a little more during earnings, but I really want to see what it involves and if it's profitable. So I'm just doing this, on paper to see if this works. You can follow along with me so you can learn how to do it yourself. So next earnings season, you'll be ready. You'll know which options to buy, which ones work, which one don't. So like I said, this is an option strategy. So let's take a look at the market. Whoops, the market watch. I had the page right up here. So let's go Jan. I think Jan. So let's go end of December. This is November. This is December. We'll give it some time, at least 1 month, so it gives it a little bit of time to move in one direction or the other. So what I want to do is take a look at these December 10s, right? So we're looking at 635 here, and then here for this in the money, we're looking at 970. Right, so I'm going to take a look at this. I'm just going to write this down because what I want to do is I want to buy one call and I want to buy one put. So I'm going to do this. I'm going to do a follow-up video and see if how profitable this actually was, and to see if this can be part of my strategy that I add. Right, I have a gap trading and short selling fundamental that I do. It's a day trading strategy that I use every morning. I mostly educate people using Moderna, the Moderna stock, because it moves hard and fast a lot, so it's easy to make money because you have volatility. But I also want to start exploring this options world here, and buying a put and buying a call, especially in a volatile time, you can make money because once you're in the money, the price appreciates faster than when you're out of the money. So that's where you can make that profit, and it's kind of riskless because you're playing both sides of the market. So 935 and 970. So if these are the two investments that we have that we would purchase in the money on both. We may adjust that. We'll keep doing these series, and we may adjust the options that we choose. So that's so if we just do one, we'll say $635, right? And then this one is 970. And then we have $15 in commission for options. So we'll leave it at that, and we'll see what the price of these options are tomorrow. And these are December 10th, right? Expiring December 10th, 2021. And that's one strategy that I'm going to do right now. I'm going to execute that, and we'll see where the price of these options are tomorrow. When I'm going to check when I'm either up or down $5. So if I'm up $5, I'm going to be taking a look. If I'm down $5 on the stock, I'll take a look and I'll compare the prices and see if there's a difference, you know, and if there is, especially with the commissions, if there's a potential of making money. So aside from that, right, we identified each earning date. We identified that there is volatility, so we can play that volatility with options because you can play both sides of the market in your account. But now, in terms of, I'm going to bring in what I've created is my, you know, gap trading and short selling fundamentals. I'm going to bring that into play here, and I'm going to take a look at some areas where I think the market or Disney is heading to. So I want to just show you something that really pops out off the screen right away, is that we are having, you know, these lower, this 186 area is very hard to penetrate, right? So we have a lower low scenario. We had it again here. This looks like a pivot or reversal. So is this a sign and signal that we are going lower, much lower? It seems to me that it's not, you know, making lower lows or higher lows, it's making lower highs. If I draw a line here, this would be, you know, the line in the sand. There was some defense that was played here, right? If we look at, you know, about 167, if we gap down, this is going to be my my play, because this is part of my short selling fundamentals, right? And gap trading. So this is what I'm really good at and what I do every day to pull profits from the market. If we have a gap down tomorrow here, right? If we open price below 167, it's possible I'm going to make a killing off my options. So I'm going to be happy. The second thing I'm going to do is I'm going to wait for the first 15-minute candle. So if we flip to a 15-minute chart, so I'm going to flip it here to a 15-minute, right? Let's remove some of this stuff here. So let's go to a 15-minute chart, and there we go. So it's far, but you know, we can see stocks move on earnings. So if we come below here, 167 is the line in the sand, and if we open here, below here, I'm going to wait for the first 15 minutes. If we have a close like this, and the close of the candle after the 15 minutes is a breakdown candle. And what I mean by a breakdown candle, and this is part of my gap trading short selling fundamentals, this is a breakdown candle, right? Breakdown candle. There's no wicks. It's a full red body, or the wicks are very small. If we have that type of scenario here, I'm going to short it, and I'm going to use this as my out. So if we start closing back above here on a 15-minute hourly basis, that'll be my risk management. I don't use stops. Again, that's part of what I teach. I don't use stops. It's in the systems. I manually close my position just to allow for volatility. And then I look for a 1% move, which would be about roughly $1.70. So which would bring us, maybe I short it at 164, and then I get out at 162. That's going to be my day trade. Now, what is the bullish? If we gap up, you know, it's going to be sell. It's going to, if we gap higher, we're going to have some selling pressure, I think. And if we do gap up, I would like to short the open. I would like to short the open on a gap higher, but if we look at other, I'm going to go and change the chart quickly here to Netflix, right? Let's see. I just want to see what Netflix did, because they're in that same industry. Walt Disney, a lot of their income right now is coming from their streaming service. And after earnings, right? Oh, it didn't gap up. But normally when you do have gap ups, there is some selling. This one didn't. It gapped down the next day. So that's what I'll do. Let's go back to Walt Disney, because I think if we do gap up, because we have, this is the only reason. Otherwise I would buy it, but I'm not that bullish on it for the following reason. We have this downward trend line. So If we gap up into this trend line here, which is roughly $5, right, more, this will be my sell area here. I'm only going to be really looking to short it. That's it. Because like, look at here, we had the gap up on earnings and it crapped out. It just seems to crap out most times, right? Earnings crap out. So I'm going to do that. That'll be my entry roughly here. So if we gap up, so this is at what price are we at right now? 175. If we gap up anywhere above 180, 180 is where I will short it, and then I will use 181, 182. If we start closing above there on a 15-minute hourly close, candle close, then I'm going to cut my position and take my losses. Regardless, I'm going to probably make money on this call put, but again, that's going to just be on paper. I'm learning. I'm excited to start using this more on a regular basis during earnings, especially on stocks that I see that move $5 to $10. So hopefully you enjoyed this video. Please like, subscribe if you stayed to the end, if you found value, and I would definitely appreciate that. If you want to have a quick chat with me, send a comment down below. I like to have quick conversations with you there. I enjoy those as well. Thank you for watching. See you tomorrow.